Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're going to be talking about SmileDirectClub or SDC stock. This stock has recently been in a downtrend. A lot of you guys wanted me to make an update video on it, so we'll just get right into the chart. As you guys can see right off the bat, we have the hourly candlesticks up. You guys can see it's using this 25 moving average as a resistance point. So the pink line right here has been a pure resistance point, and unfortunately we have blasted right through that 200 moving average, which is the orange line, and it has seen a double bottom right here. So we are looking for a bounce soon. Another bad thing that has happened in SDC stock is a lot of the volume has come down, and I do expect that there are a lot of paper handlers in SDC stock just because of everything else that has been going on this week. It's very unfortunate that the community likes to do this, but instead of diamond handing, they'll see another stock going up, such as BBIG, such as whatever, and they'll just sell their stock and try to ride the next wave. And yes, there are multiple stocks that do have potential for a short squeeze, but you're not going to get a short squeeze if every single day you're changing hands into a new stock trying to ride that wave or buying call options. So that is a quick rant about what I see as a weakness of the retail investor, because we can't really congregate our ideas into one stock. It'd be so much easier if we did, but we can't, and because of that, there's always going to be the people who are chasing those day-to-day gains, and it can kill momentum very, very quickly. Now, I'm still bullish on SDC because of a few different things. I don't think this downtrend will continue to go on forever, and there's going to be very, very strong resistance at 550. You can see right here on the level 2, there's a huge supply zone at 550. So if this does continue to dip, 550 should be at least the short-term floor for SDC. Now, just coming back to the long-term chart, you can see that SDC IPO'd back in 2019 at $20 per share, and it has essentially only gone down since. And I just wanted to point this out because there are tons of other stocks that have high short interest that have gone up over the past year. So I just wanted to teach you guys the lesson real quick that you should be greedy while others are fearful. And also, if you're buying this right now at $5.74 per share, you probably have less downside risk if you were to hold on to the stock than if you were to buy another stock that is up a lot on the year. Now, at the same time, this stock has dropped about 50% in about a year. Its revenue and net profit has actually been growing. So this is a growing stock that is recovering from the pandemic and has continued to be pinned down by short sellers. So that's a little bit fishy to me. I do think there's plenty of more upside, especially if we do get this short squeeze. And we're just going to be going over the catalyst as well. If you guys wanted to check out this software, it is WeBull Desktop. I'm throwing up the promotion on the screen right now. They're giving away up to $300, I believe, if you just make an account, and up to $2,000 if you just add at least $1 on their platform. So it's essentially free money. And I just love their desktop trading application. Their phone trading application is good. It's a huge upgrade, especially if you're coming from a brokerage like Robinhood. So definitely check it out. But we're just going to get right into that Ortex data. As you guys can see, we still have 33 days left on the short squeeze signal that has about an 87% significance level. The type 1 and type 2 signals also have 6 days left on their holding period, so I wouldn't sell this one yet. I'm continuing to hold my stock in SDC, and I am excited for what's to come over the next few months. I wouldn't trade options because options are definitely the death to the retail momentum. And just looking at some of the data, you guys can see right off the bat there has been a few changes. So remember the first time I analyzed SDC, the cost to borrow was at 260%. Now it's back at 20%. This is something that is very, very volatile in SDC, and you can definitely see that cost to borrow coming right back up to 100% if the price action does reverse and go into that upside. So this is not something that you should sleep on. The current estimated short interest interest is also about 33.88%. This is also down from about 45% from the last time that I watched. So there has been more returned shares than borrowed shares. So some shorts have been squeezed out, but there's definitely proof that not all shorts have been squeezed out, and we're going to be going over this as well. The utilization is back down to 97.5% from 100% 7 days ago, and there are plenty of shares that shorts can use as ammo now that they're just not using. And my theory is that there is a storm brewing in SDC, and the fact that they're not using these shares is because they think a squeeze is coming. Obviously, Ortex has that squeeze signal for the next 33 days. The days to cover is sitting at well over 3 days to cover on the 3-month and the 2 weeks days to cover. So this is what makes me extremely bullish on SDC, because if there is a short squeeze, it will take multiple days for these shorts to cover, and likely there will be 3 days of very positive price action at least if there is a very large short squeeze in SDC. So this is why I'm holding literally this statistic alone. It is very, very important to have a high days to cover if you want a short squeeze to last over a few days. Now here is exactly why I don't think all shorts covered in SDC, and why I think there is still a lot of potential upside in SDC stock. As you guys can see right here, utilization on October 7th was at 100%, and on loan average age was at 44 days. If we just jump to the next day, you guys can see utilization jumped down to 96.61%. And when utilization does drop, that is the first indication that there is a short squeeze occurring. But you guys can also see that average age on loan, it reached a low of about 40 days, meaning that shorts were in this stock for about 40 days. Then the next few days, you see these statistics increasing back to 44. Now we're back to an average age of 45 days on loan and a 97% utilization. So there are plenty of shorts that rode it right through that mini squeeze that we saw the other day and are still in this stock. And then right here, we're taking a look at the on loan returned and the on loan new. And this is basically showing return shares, which means short covering, and then new shares, which means shorts taking on new positions. The return shares over the past few weeks has exceeded the on loan new. And we can just look at each day. We had 7 million returned, 4 million new, about the same right here. 10 million returned, 7 million new, 10 million returned, 7 million new again, roughly the same here as well, and roughly the same throughout the rest of the month. This was before we actually saw a huge price action increase. But you guys can clearly see that there are more returned shares than new shares, and the utilization has been coming down just a bit. And what I think this means is that shorts are not coming back in to short SDC. Typically what I see when there is a huge influx of returned shares, there is a huge influx of newly loaned shares. You will typically see those shares that are returned just being put out on loan right away. With SDC, we're not seeing that at all. We're seeing more returned shares than shares put back on loan, and that gives me a general idea that the sentiment is that this stock will short squeeze, and shorts think it's too risky to get back into SDC. And this could also explain why the short interest went down from 46% to about 33%. Shorts do not want to come back into this stock. The remaining 33% are likely in a situation where they're either going to get squeezed or they're waiting for it to come down a little bit more before the next leg of the upside comes back. Another big thing that I noticed on Fintel is that there are all of these institutions that bought puts in August and the end of July, including, where is it, Citadel Advisors. If we go back in our time machine to the end of July, you guys can see this was trading at about $7 roughly per share, and then it dumped off on 8.9. But you can also see that there were loads of puts bought in this $5 or $4 range as well. And SDC is currently trading above that, and it's also suffering from huge time decay on those puts as we're now in October. So if these puts from the institutional buyers have not yet been closed, there is a good opportunity that they can still be squeezed. This is also proof that short interest is also likely much higher than 33%, because a lot of the time short interest is hidden in either puts or in the money call options being shorted. Looking at the whale alerts from today, we'll scroll up real quick. You guys can see the minimum premium 10,000 and ask side only, so it's only straight buying calls or straight buying puts. Now you guys can see there were 2 call options bought and 2 put options bought. There was much more premium bought on the call options than the put options. You can see from the pie charts that there was much more premium being traded in the call options, so it's generally more bullish than bearish, but it is still somewhat split 50-50 between bulls and bears. The bullish strike prices were spread out between the 10/15/2021, meaning that this bull expects a quick move to the upside. The other bull has it for April 14th, 2022, so he expects a long-term move in SDC, which further proves that there is likely upside in the long term in SDC, which loops back to my point from earlier where a lot of these other high short interest stocks just aren't necessarily the best long-term investments. And the bearish expiration was on 10/22/2021. The strike prices for the bulls was $5 and the strike price for the bears was $6.50. And looking at the 10 biggest option trades recently, you guys can see it was mostly bullish. 7 out of the 10 were bullish and 3 out of the 10 were bearish. So take that as you will, but the premium was definitely a lot higher in the bulls than the bears. And you guys can see SDC is still sitting pretty on that SHO threshold list, meaning that there is likely some illegal activity in terms of naked shorting and failure to delivers coming on in this stock. Any stocks that are on the threshold security list are definitely some suspicious tickers. Anyways, that's about it for SmileDirectClub or SDC stock. I really do like this stock because I think it has some of the best short interest data, as well as it has fundamental value that could increase in the future. So you're not buying a stock when it's already up 300% on the year. You're buying it when it's at a low and it has really good short interest data. So this is a fundamental play in my opinion, as well as the added bonus of a short squeeze that should come along in this stock. Now, just because I have this opinion doesn't mean that it will actually perform this way. My opinions are not financial advice, so do your own due diligence before investing in the stock market. I hope you guys have enjoyed the video. Like the video if you guys did. Subscribe to the channel for more and hit those post notifications down below. That's about it for the video. I hope you guys have enjoyed. Remember, if you guys wanted to use that link in the description to sign up for WeBull and use that charting software that I use as well, they're doing that promotion. It's only lasting through the end of October, so definitely check that out if you guys haven't already. And yeah, that's about it. Peace.